The greatest threat to the US economy is not China. In fact, China is one of the countries that wants the United States to continue growing and prosper because it is making a lot of money out of the United States. It made more money out of the US than any other country. And if it wasn't for the United States, China wouldn't be as rich as it's today. It might have taken China another century to be as rich as they are right now. The country that is the biggest threat to the United States is one of the closest allies of the United States. You know, they say that keep your enemies close, but your friends closer. Japan is the greatest threat to the United States, and that's not because they have anything against the United States, but because they are in such a huge economic crisis that they can drag down not just the US economy, but the entire global economy and can cause a financial crisis the likes that we have not seen. And here in this video, I'm gonna show you how bad the situation is. I will show you the numbers, I will show you the details, I will show you the statistics, and you will understand why this is the greatest danger to the global economy. So, if you're ready, give this video a thumbs up, and let's get right into it. Japan was one of the successful economies of the 20th century. It grew faster than any other economy. And there was a point in time where Japan overtook the United States and the average Japanese was much wealthier than the average American. Because Japan had plenty of people, with its population that is much smaller than the United States, it almost became the world's largest economy. The United States was in panic. They were trying to figure out a solution to beat Japan, because how is it that the United States will lose the position of the world's largest economy? And that persisted for a couple of years until the Japanese economy collapsed. And ever since, the Japanese economy could not recover. It has been like over 30 years. And since then, there were attempts to recover the Japanese economy. But as you can see that it has been collapsing since then. Imagine the size of the Japan's economy today is much smaller than it was back in 1990s. But the most important question is that how is it such a country that is suffering so much is the biggest holder of the United States treasury bills? Nobody, not a single country in the world invests in the United States as much as the Japan invests. And right now, they're having over $1 trillion, or I would say, to be more precise, over $1.1 trillion in treasury bills of the United States. And if they sell all of those treasury bills once in the open market, it will cause a financial disaster in the United States because it has the power to crush the entire bond market. And the bond market is the bedrock of the global economy, or the bedrock of the dollar being the global currency reserve. So if that massive sell-off is going to happen by Japan, it is going to drive the entire US economy into a crisis that we have not seen probably since the Great Depression of 1929. But the most important question is that why would they do that? Why would Japan crush the US economy by selling so many treasury bills? That's not because they want to crush the US economy. That's because if they don't do that, there is a huge chance that the Japanese economy could get significantly worse. To understand what's happening, we first have to answer the most important question. How did Japan ended up with so many US treasury bills? How did Japan ended up buying over $1.1 trillion in treasury bills? And it's really interesting because every single year, people in the United States are paying so much taxes, and tens of billions of dollars of those taxes directly go into the budget of Japan because they are having so much debt of the United States. When the Japanese economy crashed back in 1980s and 90s because it turned into one of the largest bubbles in history, what do you think governments do during that period? When you have an economy that has crashed and prices going down, the economy is down, and you have to figure out something. You must do something in order to stimulate the growth. So let's go back, for example, aftermath of 2008 financial crisis when the entire US economy collapsed. What did the Fed did? They immediately lowered down the interest rates to absolute minimal to make it easier to borrow money so that people borrow money, buy houses, corporations borrow money, start new projects, and everybody starts borrowing money. And when they start spending money, the economic cycle starts cycling again and the economy starts growing. That's at least the logic and theory, and that's how it always works in the United States and all across the globe. So the Bank of Japan immediately lowers down the rates not just to 0%, but literally to negative percentage, as if the government of Japan getting into the Japan and saying, listen guys, here we are going to give you as much money as you want just for you to borrow money from us. Now, logically, it makes no sense, because if I'm borrowing money from anybody, then I have to pay interest for borrowing that money. But the situation got so bad in Japan that the Bank of Japan had to literally pay people in Japan to borrow money. So essentially, people are profiting from borrowing money. Now, if that would happen to anybody, you should immediately go to the Bank of Japan and borrow as much money as possible, because eventually you're borrowing that money for free. You can take that money, invest it in the stock market, and you will make plenty of money. Even if you make like 1% return on that investment, you're still making a profit, because you're not paying anything to the Bank of Japan. And in this case, the Bank of Japan is paying you. Now, this sounds great in theory. This sounds fantastic, but it has its consequences. The government of Japan suddenly got hooked on this cheap money, and they started borrowing money. And as you can see that the debt to GDP ratio in 1990s was around 50%. Today, it's 250%. The data that you see over here is for 2020. If you look at the data for 2025, then it's clearly around 250%. That is double the amount that the GDP ratio in the United States. In the US, it's around a little over 100%. And we're already freaking out about a debt to GDP ratio in the United States. And here in Japan, they're having a debt to GDP ratio of over 250%. The reason that it did not cause any kind of a catastrophe is because all of this period of time that Japan has been borrowing money, they have done it literally at almost 0% in interest. But what you have to understand about governments borrowing money is that you can't create money out of thin air. There is a market mechanism of how you can do that. So any government, including the government of Japan, creates a piece of paper that is called a government bond, and then sells that bond to anybody who wants to buy that bond. That bond usually has some kind of an interest, and that allows the government to raise money. That's how the United States raises money. That's how the government of Japan raises money, or the UK, or any other government. The question is that who is going to buy all of these government bonds in Japan when interest rates are so insanely low? If interest rates are 0% or negative 0.1%, and then the government of Japan cannot possibly offer you a 5% interest rate or a 4% interest rate, because the Bank of Japan will gladly lend money to the government of Japan at 0% interest rate or 0.5% interest rate. And that's why the vast majority of all the government bonds in Japan are being held by government institutions like the Bank of Japan, which holds 50% of all of that debt, then the largest banks in the country, insurance companies, which are also in one way or another tied to the government, and most importantly, pension funds. Now the question is that how would these corporations survive when they're getting simply 0.5% or lower than that on their investments? We understand the Bank of Japan, they don't have to be profitable, but the largest banks in the country, they must be profitable. The insurance companies, they must make a decent return to make it possible. Pension funds, when you're not making any kind of returns on your investment, what are you going to do? You have to come up with a solution. And this is the genius solution that Japan came up with, essentially allowed Japan to make trillions of dollars over the last 30 to 40 years without building or creating anything. There is a huge difference in interest rates between the United States and Japan, and that has been the case historically. For example, right now interest rates are about 4.3% or 4.5%, while interest rates in Japan are less than 0.5%. Essentially, a pension fund from Japan can borrow money from Japan, from the Bank of Japan, and take that money and invest it in the United States. Because we're having an open market, because this is a capitalistic market, the rates on the bond usually reflect the rates that are being set by the Fed. So if the Fed, for example, lowers down interest rates to almost 0% and 1%, then the rates on the government bonds will go down as well. But if the rates of the bonds are forced to go higher, then the Fed has no other option but to increase the rates as well to match the rate that we have on the bonds, because everything works based on demand and supply. Why would anybody buy the government bonds in the United States at those rates? If the Federal Reserve will start artificially buying those rates at a much lower interest rate, that will create confidence in the market, which is why they don't do that. But here in this case, we have the Bank of Japan that has a much lower interest rate. So the pension fund started basically borrowing money in Japan and investing it in the United States over all of these years, which allowed Japan to accumulate trillions of dollars in treasury bills from the United States. And pension funds from now onwards don't have to make a return from their Japanese assets, because the returns that they're already making from the United States are covering everything. So the pension fund essentially is making a profit, even though that they're not making much profit or any profit or whatsoever from Japan directly itself. Basically, Japan massively started investing in the United States and making lots of money. Maybe that's another reason to consider investing as well. So if you're actually very serious about investing, just like Japan was during the days and made trillions of dollars out of the United States, maybe this is the time for you to consider joining our academy, because this is one of the things that we teach on our academy. The better you understand the financial markets, the better you understand how the system works, the better investment decisions you are going to make. Every time something like that happens, the Japanese yen weakens because you're borrowing money from Japan and you're using that money and you're buying US dollars. So the Japanese yuan is weakening, but the US dollar is strengthening, which means that it cannot work over the long period of time. At some point, this system is going to break up, since the currency will continue to devalue. But it worked in the case of Japan, because Japan is an export-driven economy. So you have plenty of these corporations that are building Toyotas, Hondas, electronics. Then they ship them to the United States, sell them in the United States. Now, all these corporations that have sold so much in the United States, they have to bring at least a portion of those money back to Japan in order to pay their employees, to pay for the salaries, to keep the factories working, to pay for utilities. But can you come back to Japan and pay them in US dollars? Well, of course not, which means that now you have to exchange your dollars to yuans, and now you're buying massively yuans in order to pay your people in Japan. Now, that creates a lot of demand for the yuan, which stabilizes the yuan against the dollar. Where do you think those dollars are going to go to? At the end of the day, when you're exchanging your dollars to the yuan, most of these dollars will end up in the hands of the government. And then the government will use that money in order to buy US treasury bills again, which creates another source of income for the government of Japan. And that was a brilliant strategy that maintained the economy of Japan to sustain for the last 30 to 40 years, simply because they have lower interest rates and the United States has a much higher interest rate. So despite the fact that Japanese economy has suffered over such a long period of time and hasn't been growing at all, they made plenty of money investing in the United States. That is a genius solution, I would say. You don't have to invent anything. You don't have to create something profoundly different and unique. All you have to do is to make a quick, really great investment that will pay you over a long period of time. But this strategy cannot work forever, because you're not actually earning that money. You're creating that money out of debt. You are making money out of thin air and then using that money to invest. In the short run, it works. But over a long period of time, this strategy is unsustainable. First of all, the Japanese yen began to weaken ever since. And for example, in the last 15 years, it has lost like 50% of its value against the dollar. And that brings us to the main problem that Japan is facing right now. Japan tried to sell their bonds in the open market, but they faced a very weak demand. They realized that nobody in the open market wants to buy the Japanese bonds anymore. And that's a huge problem, because what is the real price of your bonds? The real price of your bonds is determined by the open market. So if there is a lot of demand for the bond, then bond prices rise. But if there is weak demand for those bonds, then bond prices go down. So if you're trying to offer your bonds in the open market and nobody wants to buy them, what exactly do we have to do? That creates two fundamental problems for any government, including the Bank of Japan or the government of Japan. You need to start raising interest rates to attract investors to be able to do that. Now, if you are, for example, if I want to borrow money and I'm going to offer everybody a 1% interest rate and nobody wants to lend me money, what am I going to do? I can offer a 2% interest rate, 3%, and keep increasing the interest rates to the point until I find people who would loan me money at that rate. Nobody wants to loan money to the government of Venezuela because it's such a risky place to invest your money in. But Venezuela offers incredibly high returns on your investment, which is why there are some investors who are willing to risk their money. But if the government of Japan is going to raise the interest rate, it will make the entire system dysfunction. The system that kept Japan alive over the last 35 years is no longer going to work. The pension funds, the banks, the financial institutions will no longer be able to borrow money at the lower interest rates in Japan and then invest them in the United States, because now the Bank of Japan will have to raise interest rates. If the yields on bonds are going to rise, then the Bank of Japan will have to follow those yields to make sure that it works under the free market system. And it's not like the Bank of Japan artificially buys those government bonds at such a low interest rate, because that will make the entire system not fully independent, and that will further erode the confidence of investors in the currency of Japan and the entire economy of Japan, which is why it will force the Bank of Japan to raise interest rates, which means that this system is no longer to work, which means that the entire Japanese economy might face a very serious economic crisis in the foreseeable future. But that's just part of the problem, because the second part of the problem is even worse. To sustain the current debt, which stands at around 250% debt to GDP ratio, the Japanese government will have to offer higher interest rates in order to attract more capital, which means that the cost of servicing that debt is going to rise. Now, if you look at the Japan's treasury bills for 20 years, you can see that they have been rising since 2021, and that is a huge rise for Japan. Back in 2020 or 2021, they've been less than 0.5%. Right now, they have to offer around something 2.5%. And that number could be rising. It's probably going to keep rising because the Bank of Japan or the economy of Japan is in such a dilemma that it has no idea how to get out. And a single percentage increase in the cost of servicing the debt is going to cost the government $80 billion. So if treasury bills for Japan are going to rise by 1%, then the government of Japan will have to spend an extra $80 billion to service the debt that they have right now. If they rise by 2%, $160 billion. If they rise by 3%, $240 billion. Just for the context, the entire budget of the government of Japan is around $450 to $500 billion. And they heavily rely on debt to make sure that they finance their entire budget. But now the cost of borrowing is also going to rise, which means that they no longer will be able to raise money in order to balance their budget. That could force the Japanese economy to raise taxes. But the question is that who are you going to raise the taxes on? Japan is already going through a very serious demographic problem. Just look at the demographic crisis they have. Every line represents a group age, and the vast majority of people in the group ages, as you can see, are 50 and above, because 35% of the entire population is above the age 60, and the age of retirement in Japan is 60, which means that 35% of the population are not paying taxes because they're not working. And it gets even worse. Only 12% of the entire population is below 18%, which means that half of the population will now have to work or already working in order to sustain the other half. So the economy is already in a state where half of the population is sustaining the other half of the population. And if you increase taxes on these people, then I don't know how these people are going to survive. There is literally no chance. Japan is already going through a serious problem where people cannot afford to simply get married and get kids. And if you increase taxes on those people, then you're going to further worsen the entire situation with the demographics in the entire Japan, which leaves Japan in such a situation where it has no other good options. It literally has no option to get out of this crisis because the economy has already been suffering for the last 35 years. It was in a bubble. Now it has been suffering for the last 35 years. It did not innovate. It did not create the world's largest economies. Just like take the example of the United States and China. These two countries have capitalized on the growth of technology, and they're at the forefront of technological innovation, and their companies have taken all over the world. But that's not the case with Japan. So it leaves Japan with no other option but to go nuclear and maybe sell some of its government bonds in the United States, if not all of its government bonds, in order to save its own economy. And if Japan is going to do that, then it can cause an economic distress in the United States. Because by looking at the entire Japanese economy, I don't see any way out. But by selling a huge portion of their government bonds in the United States, that might actually give them the capital to invest in themselves and grow their own economies and finally stimulate the growth and get the economy out of this stagflation. It's not a stagflation, it's literally a stagnation that has been happening with the economy, as if the entire economy is so sick that it needs a literally serious punch in the face for it to get out of that stagnation and finally start growing again and compete with the rest of the world on the technological innovation and the technological revolution, especially with everything that's happening with AI right now. But most importantly, it's an important lesson that even if you're a country with trillions of dollars in GDP, you still can go bankrupt if you do not invest your money wisely and you do not manage your money wisely, which is why it's time for you to join our academy and learn investing, become a professional investor, and finally start making real money in the stock market. The link will be in the description. That's it for today, guys. Thanks for watching, and I'll see you in the next one.